For decades, the world has moved under the illusion that one currency could hold the weight of the entire global system. The US dollar was treated as sacred, an anchor for trade, for savings, for stability. Every government, every bank, and every business operated as if the dollar were the ultimate truth of value. It was simply accepted as the rule of the modern world, but rules, no matter how powerful, do not last forever when they are built on belief instead of balance. What we are witnessing today is not merely the weakening of a currency. It is the unraveling of blind faith in a system that served a world which no longer exists. The dollar was never powerful because of its paper. Its power came from the trust the world placed in it. After World War II, America controlled more than half of the world's industrial output. Its factories were booming, its gold reserves were unmatched, and its military presence stretched across continents. The dollar became the mirror of that dominance. Every barrel of oil, every ton of steel, every transaction between nations seemed to orbit around it. But the world of 1945 is gone. The factories that once filled American cities have been replaced by warehouses filled with imported goods. The gold that once backed the dollar is no longer there. What remains is the promise of a government that can print as much as it wants, backed by the faith that others will continue to accept it. Faith, however, is fragile when it is not supported by reality. For the first time in modern history, we are seeing nations openly question why they must trade in a currency that serves another country's political goals. When a nation holds dollars, it is also holding exposure to America's economic choices, its debt, its sanctions, its inflation, its politics. This realization is spreading fast. The dollar's dominance worked when the world had no alternative. Now, alternatives exist, and they are growing stronger every day. What most people do not see is that this decline is not happening through war or confrontation. It is happening through quiet decisions. Countries are signing trade agreements that settle in their local currencies. Energy producers are pricing oil in yuan, rupees, or rubles. Central banks are adding gold and other currencies to their reserves instead of increasing their dollar holdings. These are not symbolic gestures. They are the foundation of a new financial architecture. When trust erodes, systems begin to fragment. And when those fragments become strong enough on their own, the old system collapses under its own weight. The problem is not that America has failed. The problem is that it succeeded too well for too long and forgot that dominance creates complacency. The dollar's strength allowed the United States to live beyond its means. It could print money to buy goods from the rest of the world, while other nations had to produce real value to earn those dollars. For decades, that imbalance was tolerated because America's market was large, its innovation unmatched, and its military unchallenged. But in the 21st century, that equation is changing. Nations are realizing they can trade, build, and prosper without depending on a middleman currency. Technology has accelerated this shift. Digital platforms, blockchain systems, and instant settlement technologies are reducing the need for intermediaries. When nations can transact directly using their own systems, the psychological hold of the dollar weakens. Every new payment link that bypasses the dollar is like a small crack in a once impenetrable wall. These cracks are now multiplying. When enough of them connect, the entire structure begins to tremble. What once seemed unbreakable begins to collapse, not because of attack, but because of evolution. For ordinary people, this transformation is invisible until it suddenly isn't. They see prices rise, interest rates fluctuate, and markets panic, but they do not see the slow erosion of confidence that started years before. Confidence is what gave the dollar its empire. When confidence leaves, even the strongest paper becomes just paper, and confidence cannot be commanded. It must be earned through real production, real value, and real cooperation. This is why trust in the dollar is no longer blind. The world has matured. Nations have learned from decades of being at the mercy of another country's decisions. They no longer want their economies held hostage by the political cycle of one capital. They no longer want their reserves frozen at the click of a button. They no longer want to live in a world where sanctions can rewrite trade routes overnight. The dollar's decline is not a rebellion, it is a reaction. It is a global awakening from a long financial hypnosis. Look at the current pattern. The largest importers and exporters are now negotiating in their own currencies. Countries that were once enemies are aligning because they share a common goal, financial independence. The concept of a single world reserve currency is being replaced by a network of regional and digital alternatives. The future of global finance is not centralized, it is interconnected. And in that new ecosystem, no one currency will dominate all others. For decades, people believed that a collapse of dollar dominance would be chaotic. But what we are seeing is a managed transition. It is slow, deliberate, and deeply strategic. The goal for many nations is not destruction, but diversification. They are not abandoning the dollar out of hatred. They are reducing their dependence out of necessity. They are building safety nets so that one crisis in Washington does not become a crisis for the world. The truth is that the dollar's decline is not a failure of America alone. It is a reflection of global growth. When other nations rise, power naturally redistributes. It is the same in business, in markets, and in history. A monopoly never lasts forever. The same rule applies to money. The dollar reigned because it symbolized trust, innovation, and strength. But when that symbol is no longer backed by productive leadership, people search for something new. We are witnessing the end of an era defined by one country's financial dominance and the beginning of an era defined by balance. This balance is not just economic, it is psychological. The world is learning that value does not come from symbols printed on paper, but from the collective belief in fairness, exchange, and real productivity. That belief is spreading. It is unstoppable. The dollar's decline is not the collapse of order. It is the reordering of the world itself. There was a time when power in the global economy could be printed, when wealth could be created not through production, but through policy. The age of fiat dominance allowed certain nations to accumulate influence by exporting their currency instead of their goods. That illusion worked for decades because the rest of the world accepted the game. But now, quietly and steadily, the rules are changing. The age of paper wealth is giving way to the age of real productivity. Nations that once relied on consumption are being overtaken by nations that rely on creation. This is the most profound transformation of our time. And most people do not even see it happening because it is silent, strategic, and systemic. Real productivity is not about how much money you can move. It is about how much value you can build. A country that manufactures steel, semiconductors, food, and energy creates tangible wealth that others depend on. A country that only prints money creates promises that others will eventually question. For years, financial power seemed to matter more than factories. Capital markets overshadowed manufacturing floors. The illusion was that as long as the world trusted your currency, you did not need to produce as much. You could simply import what others built. But this illusion collapses the moment the suppliers decide they no longer want to be paid in your paper. The silent shift began long before most economists noticed it. It started when developing nations realized that their strength was not in mimicking the consumption model of the West, but in mastering the production chain itself. Asia became the factory of the world, not by accident, but by intention. While some nations exported debt, others exported goods. While some relied on credit, others relied on innovation. Over time, the global system tilted toward those who could build and away from those who could borrow. The problem with the dollar system is that it rewarded consumption over creation. Countries could live beyond their means as long as others accepted their currency. This created a global imbalance where one nation's deficit became another's surplus. For decades, this imbalance was tolerated because the consumer nations provided stability and markets for producers. But now the producers have grown strong enough to sustain themselves. They have their own consumers, their own technologies, and their own ecosystems. The dependency that once defined global trade is being reversed. The producers no longer need the approval of the consumers. They can sell, trade, and settle among themselves. Energy is another foundation of this transformation. True productivity requires power, literal power, in the form of energy security. The nations that control oil, gas, lithium, and renewables are rewriting the global script. They no longer want to trade their resources for dollars that lose value over time. They want to exchange real assets for other real assets. This is why we are witnessing long-term energy contracts being denominated in local currencies, why infrastructure investments are increasingly bilateral, and why new transport corridors are being built that completely bypass old trade systems. Productivity is no longer just an economic advantage. It is becoming the new currency of power. Technology has accelerated this rebalancing faster than any war or political movement could. Artificial intelligence, automation, and digital infrastructure allow nations to produce more efficiently with fewer intermediaries. The gap between financial power and productive power is closing. The countries that invest in technology-driven manufacturing are gaining independence from those that rely on speculative capital. The more automation spreads, the less labor cost becomes a limiting factor, and the more distributed production becomes. This is how productivity decentralizes wealth. It spreads opportunity across borders rather than concentrating it in financial centers. The silent shift is also reshaping how nations think about growth. In the old model, growth meant expanding debt and consumer spending. Governments would stimulate economies by lowering interest rates, encouraging borrowing, and increasing imports. But in the new model, growth means building capacity, factories, logistics, networks, research hubs, and clean energy grids. It means long-term planning instead of short-term profit. This is why many nations in Asia, the Middle East, and parts of Africa are growing faster than expected. They are focusing on tangible development rather than abstract finance. In this new landscape, the dollar's dominance becomes less relevant because it represents an old kind of power. The countries that produce are no longer dependent on a single monetary system to survive. They are building parallel systems that reflect real trade rather than financial leverage. When a nation trades its goods directly for another's without converting through dollars, it is not just conducting business, it is reclaiming sovereignty. This is the real meaning of de-dollarization. Not rebellion, but independence. The decline of paper dominance also exposes the fragility of systems that rely on debt. For decades, the financial world operated on the assumption that more liquidity meant more prosperity. Central banks printed money to stimulate growth, corporations borrowed to buy back stocks, and consumers borrowed to maintain lifestyles. But when productivity doesn't match debt expansion, the system becomes hollow. It can look strong on paper while decaying underneath. The moment interest rates rise, the illusion fades. Productivity cannot be faked. It cannot be borrowed. It must be built. Another sign of this shift is how countries are redefining what reserves mean. In the past, a central bank's strength was measured by how many dollars it held. Now, it is measured by how much gold, technology, and energy security it controls. This is a quiet revolution in how nations measure wealth. Gold, rare earth minerals, and infrastructure are becoming the new symbols of stability because they represent real work, not promises. The nations accumulating these assets are preparing for a future where productivity, not currency, anchors trust. Even within powerful economies, the divide between financial and productive sectors is widening. Those who invest in technology, logistics, and manufacturing are thriving, while those who depend on monetary expansion are facing diminishing returns. The stock markets may still rise, but they no longer reflect the strength of real industries. The invisible hand that once favored financiers is now turning toward builders. The next wave of global influence will come from those who can make things that last, not those who can manipulate numbers that vanish. This transformation also changes how societies perceive success. For years, the narrative of progress was defined by consumption, bigger houses, newer gadgets, and faster spending. But now, the new standard of progress is sustainability, efficiency, and resilience. People are beginning to understand that real prosperity comes from creation, not consumption. Nations that produce what the world needs, food, energy, infrastructure, and technology, will thrive, no matter what currency dominates the markets. The world is entering an age where productivity is power and trust follows creation, not control. The dollar is losing its place, not because it is collapsing, but because the center of gravity in the world economy is moving away from speculation and toward production. This movement is not loud. It has no slogans. It happens through factories reopening, supply chains localizing, and industries being rebuilt. It happens through people who choose to work, build, and innovate, instead of waiting for printed money to create value for them. What we are witnessing is the quiet return of reality to the global financial system. Those who produce will lead, those who consume without creating will follow, and those who print without building will eventually be ignored. The world is remembering the oldest economic truth. Money only has value when it represents something real. For most of modern history, global trade has been governed by invisible rules that benefited those who controlled the currency of exchange. Every barrel of oil, every container of goods, and every ton of wheat had to pass through one financial checkpoint, the US dollar. It wasn't just a unit of trade, it was a weapon of influence. Whoever controlled it controlled the world's arteries of commerce. But power built on monopoly never lasts forever. The same system that centralized wealth in one direction is now being challenged by a silent, deliberate, and irreversible reconfiguration. The new trading order has already begun, not announced by war or treaties, but by quiet shifts in how nations choose to settle their accounts. The foundation of this transformation lies in trust specifically, the erosion of trust in a one-currency world. Countries have learned that relying on a single system controlled by another nation exposes them to unpredictable risks. Every sanction, every trade embargo, every unilateral financial policy has reminded the world that control over the medium of exchange is also control over freedom. The dollar made trade efficient, but it also made dependence inevitable. When one country's political decisions can freeze another's reserves overnight, trust disappears faster than any inflation ever could. That moment of realization sparked the first domino in the rise of the new order. In the past decade, the architecture of global trade has quietly diversified. Regional trade blocs, digital currencies, and local settlement systems have started to emerge as functional alternatives. The West still sees the world through the lens of dominance, but the rest of the world now sees it through the lens of balance. China and Russia are trading energy in yuan and rubles. India is buying oil using rupees. The Gulf states are signing deals that bypass the dollar entirely. African nations are exploring continental payment systems that connect them directly to each other, reducing reliance on Western intermediaries. These are not isolated events. They are the building blocks of a new network where multiple centers of trade coexist. This shift is not driven by ideology, but by practicality. Nations have realized that the old financial order was designed for a world where technology was limited, communication was slow, and the power to print money was reserved for a few. In today's interconnected world, where digital transactions can occur in milliseconds and currencies can be exchanged seamlessly through blockchain, the idea of needing one currency to dominate all others feels outdated. The same innovations that once helped the dollar globalize trade are now helping the world decentralize it. Technology has become the great equalizer, breaking down barriers that once made the dollar indispensable. The new trading order is not about replacing one empire with another. It is about creating a multi-nodal world where power is distributed and trade reflects mutual value rather than hierarchy. For decades, international commerce was like a one-way street. Resources flowed from developing nations to developed ones, and profits flowed in the opposite direction. But now, the street has become a network. Multiple countries are connecting directly, building corridors that serve their own interests. First, the Belt and Road Initiative, the BRICS payment network, and numerous regional agreements represent this quiet revolution. Each project may seem local, but together they form a pattern, a shift from dependence to independence. One of the most underestimated drivers of this transformation is the changing nature of energy trade. The oil-dollar system, once the backbone of American financial supremacy, is weakening. Energy producers no longer need to sell exclusively in dollars to ensure stability. They have found new customers who are willing to pay in other currencies or even through barter-style agreements involving technology, infrastructure, and commodities. The concept of value for value is replacing value for paper. As more nations follow this model, the global demand for dollars naturally declines, and with it, the leverage that once came with it. Meanwhile, digital finance is building the next layer of independence. Central bank, digital currencies, CBDCs, regional payment systems, and blockchain-based settlements are enabling instant, secure, and traceable transactions across borders without needing to pass through traditional banking networks. This technological shift is the nervous system of the new order. It allows trade to move faster, cheaper, and more transparently. More importantly, it eliminates the gatekeepers who once dictated who could or couldn't participate in global commerce. When trade becomes borderless and decentralized, political power loses its grip over economic flow. The rise of this new system does not mean chaos. It means evolution. It reflects the natural progression of a world that has outgrown centralized control. Just as industries move from monopolies to competition, the global economy is moving from dominance to diversity. The idea of one reserve currency made sense in a world recovering from war, but it makes little sense in a world powered by digital intelligence and distributed networks. Every major economic power now understands this, and each is preparing its own framework to ensure survival in this new landscape. For example, the Asian and Middle Eastern economies are no longer waiting for permission to lead. They are building infrastructure that connects ports, digital payment systems, and currency exchanges independent of Western institutions. The Shanghai Cooperation Organization, the BRICS expansion, and the African Continental Free Trade Area all serve as nodes of a decentralized economy. The message behind these movements is not confrontation. It's confidence. These nations are no longer seeking validation from the West. They are defining value on their own terms. This transformation also carries deep cultural meaning. For decades, developing countries were told that progress meant integration into the dollar-based system. Their currencies were pegged, their economies were shaped to serve the needs of foreign investors, and their policies were designed to maintain stability defined by others. Now, these same nations are realizing that independence is not rebellion, it's maturity. When they settle trade in their own currencies, they are asserting their right to define value, to decide what stability means for them. It is an act of economic self-respect. that changes global psychology as much as it changes global trade. The rise of the new trading order is also redistributing opportunity. Smaller nations, which once had to choose between aligning with one superpower or another, can now build regional alliances and trade freely within their zones. Africa is beginning to trade more within itself than with the outside world. Southeast Asia is building digital payment corridors that connect its economies directly. Latin America is experimenting with shared currency ideas to strengthen regional resilience. These are the early stages of a world where influence is earned through contribution, not control. In this emerging ecosystem, trust will be built not by dominance, but by transparency. The nations that provide reliable systems, efficient logistics, and stable governance will become the preferred partners of global trade. Financial institutions that cling to old hierarchies will fade, while those that adapt to multi-currency systems will thrive. The market is shifting from a pyramid to a web structure that is harder to control, but impossible to break. Every new connection adds strength to the whole network, and every trade agreement that bypasses the old system accelerates the decline of centralized authority. This new trading order is not the destruction of globalization. It is globalization evolving into its mature form. Instead of being centered around one power, it is now being powered by many. The flow of goods, services, and information is being rebalanced to reflect reality rather than legacy. The world no longer needs one country to define its future. It can build its own. The silent reorganization of trade is not an act of rebellion. It is the natural consequence of growth, technology, and awareness. The future belongs to those who can adapt to this shift, understand its rhythm, and build within its new structure. Every empire throughout history has believed it would last forever. The Romans thought their roads and armies would keep the world under their rule for eternity. The British believed the sun would never set on their empire. And in our modern age, the American financial empire believed the dollar's dominance was unshakable. Yet history always repeats itself with the same quiet warning: no system survives when it stops evolving. The decline of the dollar is not a sudden collapse, but a slow and steady replacement by a new global reality that rewards innovation, cooperation, and adaptability over control, consumption, and complacency. The world has changed, but the old mindset has not. And that is why this transformation feels like a shock to those who refuse to see it coming. The global economy is like a living organism. It grows, adapts, and evolves according to the environment around it. For decades, the environment was shaped by one power that dictated the terms of trade, the flow of capital, and the rhythm of globalization. The dollar became the bloodstream of that system, carrying influence to every corner of the world. But as with any biological system, when one part becomes overextended or starts consuming more than it produces, the balance breaks down. The result is not immediate collapse, but gradual rebalancing. The world is now rebalancing itself. Productivity is moving east. Innovation is diversifying, and trust is decentralizing. The new economic ecosystem rewards those who can adjust quickly and punishes those who cling to past advantages. The nations adapting to this shift understand that real power no longer comes from military might or financial manipulation. It comes from creating value others depend on. Technology, energy independence, food security, and manufacturing capabilities are becoming the new weapons of influence. Those who invest in these pillars are rising quietly, while those who rely solely on printed money and financial leverage are slowly losing relevance. The dollar system once allowed one country to control global trade without producing the majority of its goods. That imbalance worked when the world accepted it as the price of stability. But now, as more countries become capable of producing what they need and trading directly, that justification has evaporated. The dollar's decline is not an attack, it is a correction of reality. The nations that will thrive in this transition are those that think long term. They are building infrastructure, education, and technology that ensure sustainability beyond political cycles. In contrast, the nations that are falling behind are trapped by short-term thinking, printing money to solve temporary problems while ignoring structural weaknesses. The illusion of control is comforting, but it cannot stop the laws of economics. When you create debt faster than productivity, when your imports exceed your exports, when your consumption outpaces your innovation, you are living on borrowed time. The clock is now ticking, and the new reality is calling for discipline, not dominance. Adaptation, in this sense, means more than adjusting policies. It means rethinking identity. For decades, Western economies have defined themselves as service-based societies, outsourcing production and importing labor. That worked when trade was global and the supply chains were cheap. But when production nations begin to trade among themselves, the service economies are left with little leverage. They must now rediscover the value of creating. This is not just an economic adjustment, but a philosophical one. Nations that once measured success by stock market growth must now measure it by industrial strength, technological innovation, and national resilience. The same rule applies to individuals and businesses. The ability to adapt defines survival. Technology is the great equalizer in this transformation. Artificial intelligence, renewable energy, robotics, and digital currencies are redefining how wealth is created. The new reality does not reward size, it rewards agility. Large institutions that once controlled finance and trade are being challenged by smaller, more efficient networks that use technology to bypass intermediaries. A small nation with strong digital infrastructure can now trade more efficiently than a large one with outdated systems. A startup can now move capital faster than a traditional bank. The power of adaptation is that it democratizes opportunity. The dollar system thrived on centralization. The new world thrives on decentralization. One of the clearest signs of this shift is the fragmentation of global finance. We are seeing the rise of multi-currency settlements, regional digital payment systems, and bilateral agreements that operate independently of Western banking networks. This is not fragmentation in a destructive sense. It is diversification. It reduces systemic risk by ensuring that no single point of failure can crash the entire system. This diversification is also ideological. It represents a world where nations prefer mutual benefit over hierarchy. Adaptation here means learning to cooperate rather than dominate, to integrate rather than isolate. The nations that embrace this principle will find themselves at the heart of the new order, while those that resist will slowly fade from relevance. Cultural adaptation is another dimension often ignored in this conversation. Economic systems are reflections of cultural values. The dollar era was built on the values of consumption, individualism, and expansion. The new era emerging in the East and global South is built on values of balance, community, and long-term sustainability. These cultural shifts matter because they influence how economies behave. Nations that align with the new ethos of mutual growth and technological harmony are rising naturally. Those that continue to treat growth as conquest are finding themselves increasingly isolated. Adaptation, therefore, is not just about changing systems, it is about changing mindset. The financial system that once looked invincible is now being quietly outperformed by systems that value inclusion, innovation, and real productivity. The proof is visible in trade data, technological advancement, and even demographics. The fastest growing economies are those that invest in human capital, infrastructure, and digital transformation. The slowest are those trapped by debt cycles and political polarization. This contrast is widening with each passing year. The message is clear. The world no longer rewards dominance, it rewards contribution. The currency of the future is not the dollar, not the yuan, not even cryptocurrency. It is value creation itself. This new reality also exposes a fundamental truth about leadership. True leadership is not about maintaining power. It is about guiding transformation. The old leaders of the global economy became too comfortable with control. They believed they could dictate the terms of progress forever. But progress cannot be dictated. It must be earned every day through relevance. The nations and corporations that fail to innovate will be replaced by those that do. The same applies to individuals who refuse to evolve. The world is moving faster than ever before, and the pace of change will not slow down for anyone who refuses to adapt. Adaptation requires humility. It demands that we accept that the systems we built may no longer serve us. It requires looking beyond pride and tradition to embrace new methods, new technologies, and new partnerships. Many nations are already doing this, forming regional alliances and exploring digital frameworks that promise stability without subjugation. They understand that the future will not belong to the biggest, but to the most flexible. Those who learn faster, innovate deeper, and cooperate wider will define the next era of prosperity. The rise and decline of every empire follow the same pattern: growth, dominance, stagnation, decline, and replacement. The only difference is how each system responds to the inevitable moment when its foundation begins to shift. The current shift in global finance is not about revenge or rebellion. It is about renewal. The dollar system can survive if it evolves, but it cannot endure if it denies reality. The new world is not waiting for permission. It is already being built by those who saw the signs early and chose to act. The question now is not who will control the world, but who will contribute to it. Those who adapt will lead. Those who resist will watch from the sidelines as the new reality takes shape around them.